গুড ইভিনিং। আজকের ক্লাসে আমরা রিডেমশন অফ ডিবেঞ্চার নিয়ে আলোচনা করব। সো যারা যারা আইএসসি বোর্ডে আছো এবং যারা যারা ওয়েস্ট বেঙ্গল বোর্ড বা বিকমে আছো, যাদের রিডেমশন অফ ডিবেঞ্চার সাবজেক্টটা আছে, তাদের ক্ষেত্রে এই ক্লাসটা অনেকটাই ভালো হতে চলেছে। আই হোপ I expect that the student I have done these chapters previously, so I am now here to give you a revision or just brush up classes which covers the entire chapter in 30 or 35 minutes. I am trying to solve and trying to give you some extra value addition that you have not got it till now. So this class is about the redemption of debenture, and it is simply I am stating here the revision class. Not the entire thing will be done, but the gap that have made in you, so this gap will be covered in this class. So let's start with this class. The redemption of debentures, the terms, it's called simply a repayment. So in Indian Companies Act, every debenture should be redeemable. So this redemption period vary from 5 years to 10 years. So maximum within 10 years all the debentures should be redeemed. So based on the redemption or repayment, debentures can be divided into two part: redeemable and irredeemable debentures. So here we only cover the redeemable part of the debenture in Indian context basically. So redemption of debenture means when we issue the debentures, as we know the debenture is a source of finance or source of capital. So at the time of issue of debenture, the journal entry is bank account debit to debenture application and allotment account, and the next journal is debenture application and allotment account debit to some percentage, let's say 8%, maybe 10 or 12%, 8% debenture account. These two journal entry basically made in BCom. I'm telling you, these two entry have made a compound entry, and we made directly like a bank account debit to 8% debenture. But in ISC or in class 12 level, class 10 plus 2 level basis, we made these two entry for issue of debenture. So for the accounting or for the practical sense, these two journal entry should be done. So I'm telling you why this debenture application allotment account is separately created, because the debenture, when debenture are issued, there may happen that the over subscription of debenture may happen. So to refund the over subscription account, we make this debenture application and allotment account separately. So if instead of making the direct journal entry, that's the bank account debit to 8% debenture, we may pass this two entry first. The second one is, now we going to the next part, is the redemption of debenture. The redemption of debenture basically the opposite of the issue part, that is the redemption is the opposite of the issue journal, that is debenture 8% debenture account debit. It might have some value like 1 lakh to debenture holders account, and then debenture holders to bank. This is the two journal entry. Remember again the notice, we first debenture account debited, this is a redemption, that is we make the opposite, the liability, as it is a liability. So at the time of issue it was credited, but at the time of redemption the liability become opposite, that is we should make it debit, and the entire amount of the debenture are charged or credited to the debenture holders account and then debenture holders to bank. Again I am telling you, in case of BCom, this journal entry again make a one journal, that is debenture account debit to bank. But please don't do this, make the two separate entry, because at the time of redemption we basically accountant make the entire amount of debenture credited to the debenture holder, because all the amount of debenture is not paid entirely on the same date. So some debenture holder may not be traceable on the same day, that is we make the debenture holder first credited, then according to the traceability debenture holder debit hoy and then bank is credited. So in our case simply we make the two journal entry like debenture account debit to debenture holder to bank. So now this is a simple journal entry, but in redemption we face that four type of redemption. Is basically in our syllabus there are four type of redemption. First one is by lump sum method. First method is by lump sum. The second one is by drawing lot. Third is own debenture purchase. From open market. And the fifth one is conversion to shares, might be to preference share or into the equity shareholder. So I am here to discuss about the first two method for this class. This is by lump sum or buying lot. These two methods are similar, but in drawing lot it's some different journal entries made. So let's start with the first topic is by lump sum. What is the meaning of lump sum? Suppose at the time of issue of debenture, suppose 1 lakh rupees, 1000 debentures suppose, or 1000 debentures issued at rupees 100. So it means 1 lakh rupees of debenture is outstanding. It has some maturity. Say let's say at the time of issue the debenture was redeemable after 5 years. So if 1st April 2015 if the debenture issued on 1st April 2015, that debenture will be redeemable on 31st March 2020, that is 15, 16, 16, 17, 17, 18, 19 and 20. So this is after 5 years. This date is the maturity date for the debenture. Since the entire amount of debenture will be repaid on the one day, that is on 31st March 2020, this type of redemption is called lump sum, that is in single amount redemption. So for this type of redemption we basically made the journal entry that I have stated earlier was debenture account debit, that is 8%, whatever the rate, percentage rate, 8% debenture account debit to debenture holders and debenture holders account debit to bank. This is the journal entry for the lump sum. Remember, in Companies Act, before redemption begins we have to make some another additional journal entries. What are these additional? The first one is that we have to transfer at least 15% of the debenture transfer, or let's say invest at least 15% of the debenture to be repaid or redeemed, and second one is we have to transfer of at least 10% of debenture issued. The term very important here, 15% of debenture to be redeemed and debenture issued. This thing will be clarified in the next topic, like the debenture buying lot. Here we can say you are in lump sum method, it doesn't make any incorrect entry, but in case of drawing lot, these two terminology or two line make some different in distincting meaning. So in our case we have to transfer or invest 15% of the debenture that is going to be redeemed. This transfer or investment should be done by 30th April of the financial year in which the debenture is going to be redeemed. It means in our case our debenture is to be redeemed on 31st March 2020. So this is the financial year is 2019 and 20. So we have to make a investment like 15% of the debenture on or by or on 30th April 2019. So on 30th April 2019 we have to make a journal entry. We have to make a journal entry of debenture redemption investment. So this journal entry is debenture redemption investment account ... debit to bank. This is the 15% of 1 lakh. 1 lakh is our debenture redeemable value. The entire amount, since it is a lump sum, the entire amount of debenture is going to be redeemed. So 15% of the debenture, that is 15% of the debenture value. So 1 lakh rupees is your debenture value. The 15% is 15,000. Is our 15,000. So the journal entry is, so journal entry 2019 April 30. So remember that it may not be a 30, it may be a 29th April, 20th April or 18th April, whatever, but in our books, in our simplicity, we make this journal entry on 30th April, but the condition or provision says that on or by 30th April of the financial year, so in which the debenture is to be redeemed. So in our financial year of redemption is 2019-20. So by 30th April 2019 we have to make the debenture redemption debenture redemption investment account to bank account. Since it is an investment, the bank account, we have to give our investment through bank account, so bank is credited first. The second one is another thing. Since it is a revision class, again I am telling you that it is 31st March 2020. In some cases in our books the question may say, or the circumstances may arise that the redemption is to be held on 30th October. Suppose we may take an example like the redemption is to be done. Redemption is to be done on 30th October, suppose 30th October 2020. Suppose suppose the redemption is to be done on 30th October. It may be 30th October or maybe November end or December end, whatever. So in that case the financial year is 2020 and 21. In this case we make the debenture redemption investment on 30th April 2020. Since the debenture redeemed in the financial year of 2020-21, so the financial year 2020-21, since it is October, this financial year, this date falls on this financial year, so DRI should be made by or on 30th April of the financial year in which debenture is going to be redeemed. So debenture is going to be redeemed in the financial year of 2020-21, so 30th April 2020 is the date of debenture redemption investment. So this is the first journal entry that should be done in lump sum redemption mode. Next, the next one is, that is the date of redemption. In this date of redemption, we have to make several journal entries. The first one is the debenture redemption that has been invested or made a journal entry on 30th April. That investment is to be sold out or is to be matured. So on 31st March 2020, this is our last or previous our example. On 31st March 2020, the first journal entry, that's the date of on redemption, the first journal entry is reselling or maturing the investment. So again I am telling, next in the thing that I have left, that is the investment is made because to get the cash proceeds which make us enabled to repay the debenture, that is to make the liquidity available on the date of redemption. So for that reason, on the date of redemption, the investment so made that should be dematured or should be resold to get the cash, and from that cash the debentures should be redeemed. So on 31st March, the selling or maturing of debenture redemption investment, the journal entry for that will be bank account debit to DRI account in, that is 15,000 and 15,000. It is the simple thing. So next journal entry is, that is the redemption part. The redemption part in 31st March, again the same date, that is debenture account, that is 8% debenture, we have taken debenture the 8%, debenture account debit, that is 1 lakh to debenture holders account 1 lakh, and the next journal will be debenture holders account debit and bank account. And another thing that should be made before redemption journal entry is making 25% of debenture transfer to the DRR, that is debenture redemption reserve. It's now not 25, it is simply 10%. It is reduced to 10% for all unlisted companies. So before this journal, that is the debenture redemption journal, we have to transfer 10% of debenture redemption, debenture amount of redemption, 10% of debentures value to the debenture redemption reserve. In our case, the debentures value is 1 lakh. So 10% means 1 lakh into 10%, that is 10,000. It should be transferred to DRR before the debenture redemption journal begins. So second journal will be statement of PL debit to debenture redemption reserve account, 10 lakh 1 lakh 10,000, and the third journal will be this is on the date of redemption. First journal this, second journal this, and the third journal will be the redemption journal, that is debenture the 8% debenture account debit to debenture holder. Next, debenture holder account debit to bank. This is the next two journal, and the last that should be done is this. After the redemption, the last journal that is left is we have to transfer the DRR to the general reserve. So last one is debenture redemption reserve account debit to general reserve account, that is 10,000. This is the simple sum which is covered. The first journal is on 30th April 2019, is for investing the 15% of the total debentures value into the debenture redemption investment account, that is 15,000. The journal is debenture redemption investment account debit to bank. Narration being 10% of the debenture outstanding invested to debenture redemption invested to some investment like fixed deposit may be stated in the books, or it may, if not stated, it's simple, 10% of the debenture value invested. Narration close. And the next is on the date of redemption, that is 31st March 2020. The first, on the date of redemption, the first journal is just selling of the investment that has been made earlier on 30th April. That is bank account. If we sell the investment, that we get the bank amount, that, and then investment is sold off, so the investment is credited. So journal will be, the first journal will be on the date of redemption is bank account debit to debenture investment account, debenture redemption investment account. And the second journal is we have to transfer the 10% of the debenture value to the debenture redemption reserve. Though the second journal will be statement, and this amount is from the statement of PL. So journal will be statement of PL account debit to DRR. The third journal is for the redemption part, that is debenture 8% debenture to the debenture holder. The next journal is you have to pay the debenture holder the amount, that is debenture holder account debit to bank. And the last journal is you have to convert this DRR to the general reserve. Okay, though DRR account debit to general reserve is almost 4, 5, 6 journals entries that should be made on in case of redemption in lump sum cases. But now some criticalities may arrive, some critical topic or advanced level part may arrive. This is, now I'm telling you simply, if debenture is if it was stated that debenture is repayable at a premium of 10% or say 5%, so in that case, at the time of debenture redemption, we have to make a journal entry like this: 8% debenture account debit, that is 1 lakh. Next, premium on redemption of debenture account debit, it was 5%, so 1 lakh into 5% means 5,000 to debenture holder, that is 1 lakh 500,000. And the next journal will be debenture holder account debit to bank. Fine. Next critical aspect may happen, like next thing may happen that the investment, the amount of that is 15% amount is invested in somewhere, like a fixed deposit or may some other aspect like government securities. From there we can get some interest. So if the sum stated that the DRI, that is debenture redemption investment, carries 10% interest rate, if it is stated, it is impliedly tell you to make the interest entry. So in our case, on 31st March, another entry should be incorporated. This is, we have made the DRI is equal to 15,000. So 10% is interest rate. So on 15,000, 10%. So this amount is invested on 30th April. So this amount remain invested for 11th month. So this is the 10% per annum. So 11th month being 11 by 12. So this amount comes to 138. So it is interest received. So for this interest received, we have to make a journal entry. If the sum states you to do so, so this will be done on 31st March. So this journal is simple. Bank account, all the receipt of a company are passed through bank. So bank account debit 138, fine, to interest received account 138. Now another advanced or critical level sums may be incorporated or may be stated, like it is stated you the bank, if the investment is made in fixed deposit account of bank, sometime bank may deduct tax on interest. Suppose in your sum it is stated that the bank has deducted 10% of the interest. If deducted, this is called TDS, tax deducted at source, TDS of 10% deducted from your interest, then we have to make another account here, that this is what your interest amount is 138. So it is 10% TDS. So 10% TDS means that the amount of interest is 138. On this 138 we have to make a TDS of 10%. So TDS will be 10% means 13.8 or say rupees 14. So 14 will be your TDS amount. So ultimately the net amount that company received from the bank on the date of maturity, that is on 31st March, is not 138. The other 138 minus 14, 134, that is 124. TDS, since the company is paying the TDS, it is expenses, you may say that like expenses. So TDS on interest account debit, that is your 14, and these two if combines, this is your interest received. Remember, student may make a mistake, like since we are getting this 124, so it is only a interest income. No, the interest income is 138, and on this 138 we have to pay the TDS of 14. Since I am paying this, so TDS should be debited and the rest amount is getting in our bank account, that is 124, and this 2 becomes 138. This journal entry should be made on 31st March 2020. This is the lump. Next advanced part of the lump sum area. Basically I'm giving us writing over the board. Suppose debenture value is 1000, 8% debenture 1000 at the rate 1000 debenture at the rate 100 each, redeemable after 5 years. it are suppose on 1st April 2015, redeemable after 5 years. The redemption date will be on 31st March 2020. Now in your sum it is written that we have understood that we have to make two additional you have to comply to provision of a Companies Act, that is a DRI, which is equivalent to the 15% of the debentures maturing for repayment. Remember, this is very important. 15% of the debenture maturing for redemption, and the DRR now is 10% of the entire debenture issued. This distinction will be clear in our next video, that is a drawing lot method of redemption. So in our case, I just missed out one topic, is this: in your exercise book or in your solved books, some question may be given like this, may be stated like this: debenture DRR balance in such way written that year, and on the date of redemption the DRR balance stood at rupees, suppose in our case, suppose I have told you 5,000 rupees. 5,000 is your DRR balance. 5,000. Where from this balance come? The debenture is issued on 1st April 2015. So from the end of this year, that is 31st March 2016, 2017, 18, 19, every year end, company may a portion of its profit, that is statement of PL, from the statement of PL, a small portion may be transferred to the DRR on every year ending, and after transferring to the DRR, the accumulated figure may stand at this 5,000 on the date of redemption. That is, the date of redemption will be 31st March 2020, since it is repayable after 5 years. The date of issue 1/4/2015, so after 5 years it comes at 31st March 2020. So on this day the total accumulated figure is 5,000. So since we know this, the DRR should be 10% of the entire amount of debenture outstanding. So this outstanding amount is 1,000 debenture into 100 each, it means 1 lakh rupees. This is the entire total amount. That should be 10% for DRR, it becomes to 10,000. So we have to have 10% in the DRR balance before the redemption begins. So but we have seen this DRR balance is only 5,000, but we have to get 10,000. So the rest amount, that is 5,000, we have to transfer from the statement of PL on the date of redemption. So on the date of redemption, the journal before the redemption journal is statement of PL, not write the account because it is statement of PL debit to DRR account, that is 5,000 already done, but we have to make total of 10,000, that is rest is 5,000. So this journal is to be made. So in your book these things sometimes stated, so then may confuse what amount to be credited on the date of redemption. So this is the clear, I think. You have to make that, you have to make sure that on the date of redemptions, what amount of debenture redemption to be made is 10,000. In other sum it may be 5 lakhs or 4 lakhs. So now we have to think that what balance has been given in our sum. It is 5,000, in your sum maybe of for 40,000 or 80,000. So what we have to done, the total amount of DRR that requires to be made, from there the DRR balance that already be done and written in your question paper, that should be deducted. The rest amount is that we have to make a transfer on the date of redemption. So this type of sum may comes in your examination of ISC. So ISC gives you a comprehensive sum that encompasses the all type of difficulties, all type of standard, or all type of critical areas into the one single sum. So students are advised to follow our all the videos and all the lectures, and if face any difficulties may contact us. Thank you.